What if I told you that in the next 5 minutes you could learn a trading strategy that completely changes how you see the market? It sounds like clickbait, but stick with me. So many people complicate trading. They fill their charts with dozens of confusing lines and squiggles. They think more indicators mean better signals. That is just not true. It often leads to analysis paralysis. You miss the trade or make the wrong move. The secret isn't some hidden magical indicator. It's using a few simple, powerful tools together. A clear set of rules you can follow every time, without emotion. This method focuses on 3 pillars of any price move. First, trend. Uptrend. Downtrend. Trade with the trend, like swimming with the current. Second, momentum. Is there real conviction behind the move? Weak moves fail. Strong moves continue. Third, volume. Real money flowing into the move. Combine trend, momentum, and volume. You get a crystal clear picture. You're not guessing. You're following a logical, repeatable process. It filters out noise. Ignore the small, meaningless wiggles. Wait for high probability setups where conditions align. Not trading more often, trading better. A straightforward method that builds confidence and consistency. We're not predicting the future. We're detectives gathering clues from the chart. Each indicator is evidence. When all evidence agrees, we have a strong case to enter. This gives you a framework and a checklist before risking $1. It's a business plan for your trading, and you can set this up for free on TradingView. No expensive software, no PH.D needed. Just learn the rules and follow them with discipline. Let's get into the tools you will be using. They are all standard, free indicators available on TradingView. Don't worry, they are incredibly easy to understand. The first and most important tool is the exponential moving average, or EMA. Think of it as a smoothed out price line that shows the average price over a period. We will use 2 of them, the 50 period EMA and the 200 period EMA. The 50 EMA shows the shorter term trend. The 200 EMA shows the longer term trend. Their relationship is the foundation of our strategy. It's our trend filter. If the fast 50 EMA is above the slow 200 EMA, trend is up. If it's below, trend is down. Simple. Next up is the Relative Strength Index, or RSI. This is our momentum gauge. It measures speed and change of price from 0 to 100. Above 70 is overbought. Below 30 is oversold. But we use it simpler. The 50 line is key. Above 50, buyers in control. Below 50, sellers in charge. In an uptrend, we want RSI to dip toward 40, then cross back above 50 with force. The third tool is volume. It shows how many shares or contracts traded in that period, the fuel behind price. A big price move on low volume is suspicious, like accelerating with an empty tank. A move with a big volume spike signals conviction and participation. We use volume to confirm the entry signal. Finally, an optional helper, MACD. Another way to view momentum. When the MACD line crosses above the signal line, that's bullish. Below is bearish. We won't make it mandatory, but when MACD agrees with EMA, RSI, and volume, the setup is stronger. It's a second opinion that confirms your diagnosis. Recap. Trend filter with the 50 and 200 EMAs. Momentum with the RSI 50 line. Confirmation with volume. Optional MACD for extra confidence. Now let's put these tools together into a clear, step-by-step plan for our buy signal. Following rules separates profitable traders from gamblers. This is your rule book. Do not deviate. First, check the overall trend. For a buy, the 50 EMA must be above the 200. If it's not, walk away. I am serious. Be patient. We do not buy at the top. We buy on sale. Wait for price to pull back toward support. Primary support is the 50 EMA. In healthy uptrends, price often tests the 50 EMA before continuing higher. This is where weak hands sell and smart traders prepare to buy. Better entry, better profit potential, lower risk. As price pulls back, RSI will likely drop toward 40 or 50. Then we want it to stop falling, find a bottom, and cross back above 50 with conviction. That cross is our momentum signal. Buyers are regaining control. A price bounce without RSI confirmation is weak. With RSI surging above 50, it's strong. Finally, confirm with volume. Look for a noticeable increase as price bounces and RSI crosses 50. High volume confirms real buying interest, low volume, no trade. Ideally, also see a bullish MACD cross. When all conditions are met, uptrend confirmed, pull back to the 50 EMA, RSI crossing 50 and high volume, you have your buy signal. Enter as a candle closes decisively above the 50 EMA. Recap, trend first. Pull back to the 50 EMA, RSI momentum reclaim above 50. Volume confirmation, optional MACD cross. Then execute on the close. Just as important as knowing when to buy is knowing when to sell. A great entry means nothing if you give profits back or let a small loss become huge. Our sell strategy works like the buy but in reverse. Use it for short selling or for exiting a long. For a sell signal, the 50 EMA must be below the 200. The tide is going out. Wait for a bounce up toward resistance. The 50 EMA now acts as a ceiling. During the rally, watch RSI climb and then fail, crossing back below 50. Rejection at the 50 EMA plus RSI below 50 is an A plus setup. Confirm with rising sell volume. Optional, MACD bearish cross. Downtrend, bounce to 50 EMA, RSI cross below 50, rising sell volume. That's your sell or short. Never risk more than 1 to 2% of your capital per trade. With $10,000, that's $100 to $200 risk. Use a stop loss. For buys, below the recent swing low. For sells, above the recent swing high. Define risk before entry. Aim for at least a 2 to 1 reward to risk. Risk 100. Target 200. Use fixed take profit or a trailing stop to let winners run. Always have an exit plan for both outcomes. Before real money, test the rules. On TradingView, use bar replay. Log the last 100 setups, wins, losses, average profit, average loss. That's backtesting.